So Michael Maloney, I'm the CFO of CoinMint. We're a North American, U.S.-based mining facility. We operate 2 facilities in New York State, a 10-megawatt facility in Plattsburgh and a 435-megawatt facility in Messina, New York. We have a lot of the same problems that Sean has and a lot of the same visions. We've been operating since 2016, and we're very bullish going into the market for a lot of the same, or into the halving for a lot of the same reasons that Sean said.
And so, CoinMint, Puerto Rico.
Oh, most importantly, yes. So CoinMint is a Puerto Rican entity. All of our senior management lives down here. So it's an Act 20 company. All of our C-suite, besides myself, and don't worry, I'm trying, are Act 22. So that's why we've been down here for a long time, and it's a hugely beneficial tax structure for how we set this up.
And then Sean, you're Act 22, but the company is Canadian, or how does that work?
Yeah, I have an Act 20 company as well, but Hyperblock is a Canadian entity. So there are some benefits to the Act 20 structure even for a Canadian enterprise, but I think less so than for an American enterprise.
I know there are some benefits as long as it's less than 50% American shareholders and mainland, because Canada doesn't count as that. So
yeah.
So I still think it's interesting that when you look at Bitcoin blockchain and the folks who've moved down here, mining doesn't come up very often, but here we have the CEO and most of the company of 2 of the largest mining operations in the Americas in Puerto Rico. So I think that's a good story. MichaelAngelo, Scott Walker is not here. He's obviously on Sirius Island time, so I would love for you to come up and join the panel. We're talking about the halving. We'll get a trader, so it's not all miners. So MichaelAngelo is with Tradery Labs, which is a thank you. Which is a technology company based, again, also here in Puerto Rico, and in the process of launching some Delaware funds based on their trading technology. So, Sean, when you were noting the 55,000, and you also mentioned 100,000, both numbers are correct. Because 55,000, I believe, was he thought the average was going to be for 2021, and I think 100,000 was where you're going to have, because you saw there was peaks. Like right now, in that same chart, he said that prior to the halving, we should be at about 8,500. And obviously, we've been over that several times. We've been under that several times. He also recently said that he thought after the halving, we would not go below 10,000. Oh, I also did not mention that there is now, this will be our 13th time trying it, the price of Bitcoin at the start of CoinAgenda has always been lower than the price of Bitcoin at the end of CoinAgenda. So I don't know whether to count the opening cocktail party or the first session today, but I don't have to, because it was basically the same price, $88.20. We did dip about an hour into the cocktail party to $85.60. And then we recovered, but we're going to go with 88.20. So, and it's only a 1 day of content, so keep our fingers crossed that we're above 88.20 at the closing bell. So I'm going to start with parts about the. There's a great cartoon that is on another one of the Medium posts, and again, he's at 100 trillion USD is his Twitter handle. He goes by the name Plan B. There's another really good one called at Philb, FILB. I think it's like Phil stuff with Bitcoin. I'm not quite sure, but at any rate, both really good analysts on Twitter, So with one of the Medium posts, so the stock to flow actually became popularized in the Bitcoin Standard Book because this economist was talking about stock to flow ratios and Plan B, credits that. And what he did was he developed it into a full chart as opposed to test the presumptions about that. Because in the Bitcoin standard, they note that certain forms of, and they call it hard money, as opposed to like the moneyness of money, but basically, the USD, now that it's not backed by gold anymore, is not hard money because you can print as much of it as you want, and lately we've been doing that. Same thing with the RMB, where they've actually printed even more in volume. I think they're 40 trillion now in national debt for China, and we're a mere 25, 24 trillion. So, if you look at the numbers of where we were even 20 years ago, it was nowhere near this. In fact, we had a balanced budget during the during the Clinton administration. So obviously, this has been the big solution to all of our problems: just print money, print money, print money. It was interesting because in the Bitcoin standard, they mentioned why this doesn't work well with copper. If somebody wanted to go and corner the copper market and just started bidding up the price, there's so much copper on Earth, we can't even map it all. So you could go and just continue to ramp up the production. Silver is a byproduct of other mining. And so when the Hunts tried to take over the silver market, and it's been twice that it's gone up to about $50 in the last 50 years, production just ramps up, and that stock to flow ratio, which for copper is almost infinite, you have a lot. Gold is not the same. We don't know how much gold there is, but if you were to go and quadruple the number of gold miners out there, it would up the production a bit, but it wouldn't go over, say, 3%. That's been the highest it's been in the last 50 years or so.
It goes back to that price elasticity of supply comment that I made, I think, where copper has a normal positive slope to the price elasticity of supply. So as demand perturbations cause the price to go up, new supply can just come sweeping into the market. Similar for silver, but maybe less so, and then even less so for gold, but they're still all a positive slope.
And of course with Bitcoin, you could go and increase the amount of mining by 1,000x. It would still not create a single extra Bitcoin because it's already programmed in of how much new supply is coming on the market. There's a cartoon that Plan B put on, I think, his most recent Medium post. He tweets constantly. He only puts Medium posts out every a couple months. But he had a New Yorker, kind of a variant of a New Yorker-style cartoon, where there's a Bitcoin laying on the floor and everybody's just walking by, and he's like, I guess they must not believe they must believe too much in the efficiency of markets, so no one's picking this up. And so I think, that's my presumption of why people are still saying, even pros are saying, you should be shorting at 9, but yes, it'll be 100,000 next year. So, MichaelAngelo, where does trading and sort of algorithms come into this whole stock to flow with the ups and downs? And you can talk a little bit about Tradery as a prelim.
Yeah, for sure. So I started a company about 2 years ago, small group. It was PhD mathematician called Richard Clare, friend of mine, and my CPO, Ryan Unger. He started one of the first design firms to focus exclusively on mobile. At first, we wanted to really hone in on kind of OTC tools, but then something came to mind when I read this quote from Warren Buffett that said, if you want to understand success, you should understand compounded interest. And one of the best markets to obtain compounded interest is the crypto markets, because you get volatility from 2 to 20%, and that's insane. So if you really want to hone in on that gap, you have to go and focus on automation algorithms. So 2 years ago, we focused our efforts on doing quantitative trading, so high frequency. So at this moment, we could study anywhere from 300 to 900 different variables, from volume to different indicators like Fibonacci, spread, liquidity. We kind of bundle all these different sets of information to one algorithm that could study the market pretty precisely. So with Ethereum, a couple months ago, I showed you, Michael, Ethereum was up about 60%. We were up 99%. Even though we found ourselves last week with a dip of like 6% with Bitcoin, we're still up about 20-30%. and we've been doing great so far. So in terms of algorithmic trading, what's interesting, I know the conversation is about Bitcoin's next cycle, but something I don't think people are focusing on is a big recession that might happen in traditional markets and how that might affect Bitcoin. Because if you look back at earlier recessions, investors used to kind of change their fiat money into gold. And something that's interesting to me is how Bitcoin could replace the gold standard, and how investors or new investors might transition from changing fiat into something like Bitcoin and using that as a store of value.
So far, that doesn't seem to be happening. Also, I just want to make a disclosure. I'm a advisor to Tradery Labs, and they will be a general partner in the master fund that they have coming up. So just a disclosure, I'm a big believer in what they're doing. So I think the point here is that a lot of people are expecting the coronavirus is going to send the prices up, and instead the opposite happened. But the question is, was that actually people panicking, or was it the fear-greed ratio and a couple of whales coming in and saying, this is a good time to dump right now? We have another one here, too. So.
Oh, well, let's all get everybody on here doing this. Before we jump into the fear-greed part of that, from the mining perspective, large-scale miners and small miners, we're all inherently long Bitcoin. The way we calculate our cost at the end of the day is really just how much does it take to produce a Bitcoin. We're producing a Bitcoin with latest generation equipment for less than $1,800 a coin. So while I want Bitcoin to go to 20,000, I'm okay with it at 88. It's not making me happier. But as part of that, we've actually already seen coronavirus impact mining in a number of ways. Largest manufacturers of equipment are, of course, in China. Some of that equipment is made in the Wuhan province, and we've had orders canceled. We've had shipments that would be going down to Malaysia and would therefore be able to be tariff exempt, no longer be able to leave China. So we have the option to purchase that equipment at a 25% surcharge. And as a result, despite the price changes, we've seen the price increases over the past 2 weeks, we saw modest increases in difficulty when we would see more usually. And now we're tracking about a 10% drop in difficulty. Sean and I will probably talk about how difficulty will affect the price after the halving after this. So we're already seeing a depressing effect on the availability of equipment, which is going to compound with the price components. So
which is actually good for people who have existing older tech because it'll be relevant longer.
Yeah, the S9s that are in the market were generally going for about $80 to $100 last week or 3 weeks ago. We've seen pricing of up to $120, $150. I mean, I personally don't want S9s, but there's a lot of people that are gathering these up to mine. If you think of hash rate markets as a broader field, people are picking these up to mine BCH and BSV at profitability.
And Avalon miners are coming out fine because they're not in Wuhan, or are they similarly?
Avalon, in my experience, Avalon has not been able to meet the delta of demand that Bitmain currently fills. MicroBT has kind of been stepping up quite a bit, but they have the same problems that China does, or Bitmain does in China.
Do you guys think as BTC goes up, sales will go up as well for hardware? Like before, like when it hit like 20K? You guys remember that? People selling like units for like $30,000, $40,000 on Amazon and eBay. It was crazy. Everyone wanted to mine.
My estimate for... Okay, we got bit by that. We'll be honest. I will never buy hardware at over $20 a terahash ever again. We saw people selling it for $150 a terahash. My estimate for how they set that up is about a repay cycle of 60 to 90 days per terahash in the market. And Bitmain seems to be hitting that. Pre-halving, it'll be very interesting to see if there's a run-up on that. My expectation is that the difficulty, because of world events, is going to stay pretty flat. But post-halving, we could see 40-watt hardware jump to a price of about $40 to $50.
I was going to say, logically, one would think that the difficulty drop would be made up in a couple of cycles, right? Is that what happened last time, and will the coronavirus affect it this time?
Do you mean What a difficult. Are you
Well, in
asking
other
what
words,
happened to mining difficulty
should
after the
jump
last
quite
halving?
a bit, right? Once you need twice as much of it, or rather drop quite a bit.
Right. If a lot of the guys go out of business, like what we're predicting, then you will see a big drop in difficulty. Because like I showed, we've got 60 exahash. So the total mining network, just for everybody's edification, is about 110 exahash right now. And the estimate is that about 60 exahash of that is previous generation hardware, some of which was manufactured as much as 4.5, maybe even 5 years ago. So if those servers go away and we lose even half of it, that's 30 exahash. That's going to be a 26%, downstroke in mining difficulty. The whole, calculus that we as miners make is that if we have cheap enough electricity price, and given the fact that it's a self-correcting network, we'll be able to. The metaphor that I've used in the past is sort of this camping trip. You're on a hike, on a backpacking trip with 6 or 8 of your friends, or maybe people that you work with or whatever, and you round the bend, and all of a sudden there's a 12-foot tall grizzly bear, and it starts chasing the group. Well, you don't have to be able to outrun the grizzly bear to survive. You have to be able to outrun the other people in your hiking party. And that's exactly what happens in mining. If you can outrun, and if you're a lower cost operator than your competition, then you're going to be all right, regardless of what the price of Bitcoin is, as long as you're not overextended or some extenuating circumstance.
So supply and demand, even though stock to flow hasn't seemed to have been, sort of affected over the long haul by it very much, I think it's priced in the sense that human psychology, when the prices go up, it gets more attention, and the retail investors come in at the exact wrong time. And then all of a sudden, if you look at the fear and greed ratio, it was 95 when it was just about to hit 14,000 over the summer, which was the exact time you should have been selling, because the stock to flow said it should have been around 8,000. But meanwhile, the fear and greed ratio was at 95, whereas 50 is like even amounts of fear and greed. I think right now it's in the 40s. So we're back on the fear side.
Wait, I might have missed something. What's the formula for this fear greed ratio?
Just look up fear greed ratio. I think there's some algorithmics behind it, because they come up with a precise number every time. Maybe buys to sells, or you should know this, right?
What exactly?
The fear and greed ratio?
Not sure.
Is that one of the ones you're using?
No.
Okay. Any lifelines, fear and greed ratio? Who invented it? At any rate, it seems to be pretty accurate. When it gets too high, all of a sudden somebody dumps. When it gets too low, it's a good time to buy.
I wanted to comment on something that I think you said, MichaelAngelo, or maybe the two of you guys were talking about gold prices and maybe even gold stocks during the last economic crisis that we had back in the mid to late 2000s.
And now, too. I mean, gold is up, 40% in the last couple months?
Right. But what I remember reading, because I tracked the 2008 financial crisis pretty closely, I remember reading sort of like in 2010, 2011 timeframe an article about the junior gold mining stocks and how they just absolutely got annihilated in the 2008 financial crisis. But then they recovered, by an order of magnitude and more within 12 months of the TARP bailout or whatever was announced in February of 2009. And so when I've been, I think you mentioned, Michael, that people were expecting coronavirus to have an upward influence on the price of cryptocurrencies, and the opposite has occurred. It reminded me of that situation with junior gold mining stocks back in the financial crisis era, where they got hit first because they're pretty risky investments. People wanted to build cash or what have you, and they hadn't really accepted the fact that the whole ship was going down back then. And so they sold off some of these peripheral pieces of their portfolio, but then very quickly those stocks just exploded
They were a
higher.
great buy in 2009. And the other thing also, if you look at the price of gold, the all-time high price of gold was not 2008, 2009. It actually was wobbly then. It was 2011. So there's a little bit of a delayed effect, but it did, ultimately go and peak out at 2011. And then when the economy started coming back, it's been downhill slope until 6 months ago.
I'm going to give it to you in 1 second. I totally agree with you. The fascinating piece of gold prices today, in my opinion, are looking at it denominated in other government fiat currencies. So actually gold is at an all-time high denominated in Japanese yen. It's at an all-time high in euros. It's at an all-time high in many of these other fiat currencies. And you kind of forget about that living in the United States, because the all-time high gold price back in 2011, right before Obama announced that we killed Osama bin Laden. I don't know if anybody remembers this, but I was sitting at LAX, and I was a big gold bug at that time, after spending a couple of years buying into it. And I thought it was so remarkable that Obama came on to every network on some day in late 2011 and announced that we killed Osama bin Laden. The USD to Japanese yen was trading at something like 80, which was considered to be like a Maginot line that we could not go below. And the announcement was made, and then all of a sudden precious metals got annihilated, and the US dollar started to depreciate again in relation to these other government currencies. But it's interesting to look at gold in other currencies now that we don't often think about living in the US.
So what is it, and I think we're getting close to the end here, but what is it? Again, supply and demand, you need the new demand to come in. Historically, that's been driven on price. But the other thing that's supposedly going to drive it isn't going to be US dollar, but it's going to be places like Argentina, like Venezuela, places that, the at 100 trillion USD is not what he thinks Bitcoin's would be worth, which would be $5 million per coin. He's got a picture of the Zimbabwe $100 trillion bill on the top. And there's several other places that have had similar hyperinflation, and so he's predicting that this potential for hyperinflation in the U.S. economy. But let's go to other economies. I mean, the number, I wrote a piece in 2014 about it. It still hasn't come true, but all you need is like one of these countries that's, 50, 100, 150 million population to go into triple digit inflation. And the technology now is such that you are starting to get more and more South American, investors in Bitcoin, much to the, arguments from their government. Mike.
So looking at it from a supply and demand, and this kind of neatly wraps up, I think, the mining thesis. If difficulty goes up and price goes up, everybody keeps mining and they're happy. If we think about it with what we're expecting to see into the halving, flat price, flat difficulty, and then a drawdown from there, we're going to have a unique market condition where Chinese miners are going to have to sell their stockpiled BTC for one of the first times. So we're going to see sell-side pressure that's going to keep the price down for probably about 30 to 60 days post the halving. So I'm expecting to see, just like we saw in 2016, a big jump there. And to credentialize myself on that, I correctly guessed the halving within 10 minutes and won the Consensus 2016 award on that, which gave me a VR headset that immediately was worthless to me because VR is expanding faster than Bitcoin ASICs. One thing that I want to say, you're talking about gold, and this is the benefit of CoinMint, and Ashton Soniet, the founder, is probably one of the best energy traders that has ever existed. We're looking at it as an energy play because we mine Bitcoin anywhere in the world for a fixed price. And we can sell that Bitcoin anywhere in the world and theoretically buy energy and mine more Bitcoin. Mm-hmm. So I haven't done the extensive gold bug thought, but if you're, I guess, a spark plug or whatever fancy name you want to come up with it, I think there's a real strong argument that BTC price as a store of energy is something that could be made, and I've seen articles on it, not by anybody who has a good Twitter handle, but they're there.
Great. Last question, and then we're going to move to our next presentation. BSV. also follows halvings. Is that April, May, or when is BSV? There's still $1 billion plus valuation.
I think it's April. Pretty sure it's April because it was BSV, of course, is a controversial hard fork of BCH. So BCH got several tens of thousands of blocks ahead of BTC after its hard fork due to the different difficulty adjustment algorithm. And then BSV split off of BCH late last year. That's what in my
So they may come first then, because they probably got a few extra blocks too.
I'm not sure. I'm not sure who's going faster between BCH and BSV, but they're going to be pretty close.
Okay.
I don't spend a lot of time attending or paying attention to the BSV network.
They have had pretty sizable runs up and down in the last, surprisingly. I mean, considering that, there's a lot of, Craig hasn't presented the keys to Bitcoin on the golden horse yet. So.
One of the things so when miners are looking at profit switching, the majority of pools that are out there are either day of average or a 10-hour run-up average. So it's not as easy for us to chase the dragon on wherever that price is. In addition, BSV, by some estimates, has as much as 80% of the mining controlled by a single entity. And from a business perspective, they're very aggressive in purchasing new hardware and seeking out new energy sources. Very impressed with that. From a Bitcoin, or let's say just a Bitcoin white paper perspective, so that I don't fall on any political side, it is concerning whenever you see a concentration of greater than 40% anywhere.
Okay, thank you very much for the enlightening on the halving. And one question from Pedro.
What is the outlook for mining past the final Bitcoin mining date?
6.25 BTC per block.
Right. What 2030 that they anticipate?
Oh, 2140.
Over 100 years, but the last 100 years is only 1 million Bitcoin.
So what do you guys anticipate? Do you guys anticipate this to be a power struggle once the last 100 years is like 2130, something like that, 2030?
I think the price just keeps going up to keep a certain number of miners in business.
My robot suit will keep me alive and mine Bitcoin well past 2140. Yeah.
Okay, thank you, panel.